And we're back, everyone, to Benzinga's pre-market prep. Apologize for the technical difficulties we had earlier, but we're back. Joel O'Connor, Dennis Dick here with me. We got a lot to get to, so let's jump right in. Joel, how are we doing in the SPOOs right now?
SPOOs went a couple ticks above yesterday's high, 95.50 is your target on the upside. Pre-market low is 24.89 even, so look for that. Yesterday's low down at 85 and a quarter, but a tight range overnight. Crude up 45 cents at 48.68. Gold and silver on the rebound. Gold up 5.10 at 13.37.80, and silver right at $18 on the nose, up 11 cents. Dennis, how you doing here on this Wednesday morning?
Doing pretty good here, Joel. Take two, but not take two for the markets. We're down a couple of points here. Is this the start of a new correction? I mean, we're down 2 points on the S&P.
Is this
the start?
You're trying. No, it's the exact opposite, Dennis. You've trained me well. This is the dip.
This is the pullback you have to be buying.
Exactly. I mean, if you come in and you see red on your screen, you just got to start lifting offers because, eventually it's going to be green. But
that's what happens. I mean, that's what happens every day. I mean, it doesn't take a genius to figure out this market. You just buy the pullbacks and you win.
Right. And
forever.
Potential double top, though, Dennis, if you want me to put my bearish hat on. 95.50, that was the high from this morning session. 24.95, the high yesterday. So potential double top in there. So if you need a bearish slant, then you can get it from me always.
You can always find something to be bearish about. All jokes aside, though, I mean, this market is the most resilient market that, I've ever seen. I've talked about that before. We have a hurricane, a storm that trashes Florida over the weekend, flooding everywhere. And, we catapult to all-time highs. And then we do it again there, yesterday, making new all-time highs again. You can't fight this. I mean, if you are a short seller, how? Like, and I'm a short seller too, but and it's day trades. But if you're an eternal short, I just short the market, and on one of these short funds that are primarily focused on that, it's a difficult gig. I mean, these stocks, they come back, and even the big dogs, and there is some sectors, we've always said there's always some dog sectors to find, but this overall S&P, I mean, I see it down here 2-3 points. I think it's going to close up today. I mean, it does every day. I don't see any reason why, we can't go make new all-time highs here again today. The bias is still to the upside.
That's right. I mean, and now, support is rapidly moving up. You can't even really think bearish until you take out the low from the previous day, 24.85 and a quarter. And that's 6 points away from where we're currently trading.
Let's jump over into individual news. The big thing that everybody was talking about yesterday was the Apple iPhone event. Apple stock, though, not responding that well to it. It got hit a little bit here. I mean, first of all, and Spencer, I don't know if you can enlighten me here. Why do we come out with the iPhone 8 and then the iPhone X, which is the iPhone 10? We don't have a 9. Why bringing two iPhones at the same time, though? I don't get why they came up with the 10 and the 8. Basically at the same time. Why? I don't understand.
I don't work for Apple, so I don't know the answer to that question. I was really bummed though, because I don't know if you watched it, Dennis, but at the end they were done with the presentation, and then they said one more thing. We have one more thing to show you, and I was like, oh man, new product, great. Nope, just another iPhone. It's a cool iPhone, but it's just another iPhone. And I was like, oh darn it! I thought they were going to come out with an actual new product line, but I was wrong.
I mean, that being said, there's going to be some people that are going to go out there and they're talking that this could, shatter records even, on buying, on the orders that could happen for that new iPhone. But, you look at it, I look at it and I think, well, they souped up the camera a little bit. They now have wireless charging, which kind of cool. That has been done. And John Dodson bringing up a great point here. We're just going on a little tangent here for a second. Bring up a great point because there's a company, Watt, W-A-T-T, it's Energous Corp, and they specialize in wireless charging. And look at what that stock did yesterday after the iPhone was announced that it's going to have wireless charging. That stock went, W-A-T-T, from $12.50 down to under $10. It did get a little bit of a rally after that, but it's sitting here this morning, offered at $10.65, down significantly. I mean, here's a company that specializes in wireless charging, and Apple's just incorporating this into their iPhone. So, a direct attack on this company here. And they're, it's pretty cool that they were able to do, wireless charging. But with Apple coming into their arena, people aren't too happy with owning WATT, at least yesterday.
All right, AG Penn and Wave Trader are pointing out to us it was the 10th anniversary of the iPhone.
Okay, so fine, but it's confusing that you don't have a 9. But why come out with 2 iPhones? And why did they come out with the 8 and the 10? Why didn't they just go straight to the 10 then?
The 8 and the basically the 8 is going to be forever known as the little brother to the 10, because that was the star of the show yesterday, was the 10.
And then they say, we're coming out with an 8 too.
Yeah,
I don't know. It's all confusing. Marketing department fail, in my opinion.
Okay, well, great.
They come up with awesome products. I'm not going to dock Apple there, but this is very confusing for me to have an 8 and a 10, no 9. We'll come out with the 10 first. Oh yeah, we have an 8 as well. Just confusing for the consumer, in my opinion.
But it's a cool.
All right.
All
right, I want to just do quick technicals. First of all, I just want to talk about Watt, and that got hit yesterday, trading down 41 cents at 10.50. You did have a low in the move down at 8.91, so keep an eye on that. That's a big level. It's the lowest it's been since 2016. But I want to talk about Apple here, and the reason I do is because it had a much bigger than average trading range, over 5 points versus 2.78. Also nearly triple the 20-day average volume, so significant volume in it. I want to point out that the high of 63.96 was only 8 cents away from the all-time closing high of 164.04, and you also had another close at 164. So I think you're going to find sellers way ahead. I mean, we're 4 points from that. I don't think we're going to see 164 for a while. Coming back on the downside, folks.
What's a while? 2 days?
No, I'll go lunch bet on this. I'll go lunch bet on this one, Dennis. You got me fired up now.
I'm just joking with you because BTFD seems to always work, but I still think potentially Apple makes new all-time highs again. I'm not fighting the tape on Apple.
Yeah, but I just feel that when you have that kind of volatility on that kind of volume, that definitely some people got stuck up there thinking,
true.
Right. And so now I think sellers are going to be coming down on this. We're already trading in the red today, so there's so pressure. There's no big catalyst coming out. The event's over with, right? And then I just want to mention on the downside, you got a triple bottom at the 158.50 level, 58.77 from yesterday, 58.33, and then another low right at 158 and change. So those are your big parameters. You can bounce around like a ping pong ball in between there. Below 158.50, I'm looking at some puts, and if it gets back, I just don't think it's getting back up to 164 anytime soon. And you also had that ridiculous price action off the open yesterday, because what did Morgan Stanley say? It was going to like 380 or something like that. Was their price target?
256. So yeah, blasting off into orbit because the Morgan Stanley analyst coming out, not upgrading it, but raising the price target and giving a very bullish thesis for the stock. And we know that took it off in the morning ahead of the event. Gutsy for them to, be doing that. Typically, if you're just looking, from, every time these have these events, it seems like every time they have these events, Apple sells off, doesn't it? When's the last time Apple rallied hard off of one of these events? It's been a while.
I know that
because they never come out with the flying car.
I know that historically, Apple has closed down on iPhone release days.
Yeah. I think it's, I'm just going, I don't have any stats behind this. I'm just going from memory here. And sometimes I have the goldfish memory, but it just seems to me like every time Apple has an event, it ends up going down after the event.
It's a run up into it, very high expectations, and then
they don't meet them.
And they don't meet them. So
but then at the end of the day, you look at it 3, 4, 5 months later, 6 months later, and the stock's making new all-time highs. So it's hard to bet against them. I mean, they're doing a lot of things. Let's talk, like Apple, they got the AR, some people are saying they're going to be the company going forward there with augmented reality. Looks like they're doing some pretty cool stuff. I mean, it's early, it's new. Augmented reality is new, but if you believe that AR is the future, as I believe, Gene Munster, who's going to be on the show. Is Gene coming on tomorrow?
He is coming on tomorrow.
Yeah. So we can ask him about this, but I think Gene has said before, like Apple, Google, those are your leaders, going to be your leaders in AR as this whole new sector develops. And if you think new products are going to come from that, which I believe as well, it's hard to bet against the company with all the cash that Apple has, and all, they've got some brains there too. They weren't just Steve Jobs. There's some brains behind them, some very smart people that work there as well. So it's hard to bet against them long term, saying that this is the top here, because there wasn't really that much cool stuff that came out from this event. I think that AR is a wild card for them, and I think it could be one of their next big products. We don't know. They're gonna have some apps that can obviously do some AR stuff, but that is a growth industry when you look at augmented reality.
Yeah, I just don't get that. I mean, maybe it's because I'm too old. The whole AR thing. I don't understand.
You wouldn't think it's cool, like with me and when me and Nick were having the conversation yesterday, where you could be like sitting there and you could have like the whole, like, instead of when you go to a sporting event, imagine you're Michigan football and you go to all the games, so it wouldn't matter to you. But let's say a road game you can't go to, you could have that like 3D hologram sitting there on your, or you they could put you there that you're like feeling like you're at the stadium right now, enjoying everything all around you, but you're sitting on your couch. I don't know. I think it'd be pretty cool from a sports perspective. Even I think that's a direct, way.
Okay.
It could be, you could go to all those games like you feel like you're there, but you're really sitting on your couch. I mean, I think that's the future. I think it's going there. So I think the companies that can take you there are going to make you money. And if you're investing in those, and these are going to be good questions for Gene tomorrow there, because I'm curious if he has some other companies as well. But Apple, obviously, and Google, as have been said before, that they might be the leaders in this.
Virtual reality. I mean, can that, like, my tailgates that I go to, can they like have virtual reality tailgates? I mean,
everything.
How are you going to taste the food if it's virtual reality? I don't know.
They'll figure that out too. Yes, everything. They're gonna figure it all out, Joel. This is the new world.
Okay, before
we move on, made up around you.
Okay, we have some news on Amazon that I think might be the biggest news. I've never been more bullish the stock. They are the greatest company ever.
Because Loop just put like a $1,200 price target on him yesterday. Are you
Spencer,
more bullish, Loop?
Yes, I am. And Spencer, tell him why.
I wish I didn't bring. I already regret bringing this up on the pre-market show, but Amazon just greenlit a docu-series following the University of Michigan football team. So
go Blue!
Yeah, heck yeah! I mean, they just know. I mean, that is probably going to be the most popular show on Amazon. And no, I think it's great. I'm a little tongue in cheek there. Actually, Ty on her desk slacked that to me last night, and I got a chuckle, and I thought I had to mention it. Haven't looked at Amazon in a long time. Let's just do a real quick technical, and I tell you, there's some nice resistance forming here, and you might even get a shot at it today. You've had pair of highs, 985. That's my level. Two highs, 984.50 and 984.67. That's your major resistance, and your major support, I'd say, has to be at the double bottom at 960. But just had to get the quick Michigan.
It's showing some life though again. I
mean,
it's got hit hard, and it is starting to show life again. It's so hard to bet against companies like Amazon, Facebook, Apple, Google. And the biggest thing is because there's so many ETFs out there that own the hell out of these. And every time a new growth ETF is launched, these are the major holdings in it. And then they go scoop it up. I mean, how much of this can be driven just by new ETFs that keep coming out every single day? So there's a lot of considerations when you're trying to bet against companies like this, but they do come out with new stuff all the time. There's a lot of brains. You're buying the best brains behind the operations when you're buying companies like Amazon, Google, Apple. Now, the only thing is I've always liked the Apple and Google valuation better than the Amazon one, which is why I'm not an investor in Amazon, because I'm kind of the value guy. But I still own Google. I still own Apple. I'm still sticking with them because I think there's a lot of new technology that's going to be coming around that we haven't even thought of yet, and they're already thinking of it.
All right, let's the retail sector. We've kind of neglected that a little bit. It has been kind of quiet, but we got some news today in the retail sector. Spencer, what's Nordstrom up to?
Yep, the Nordstrom family is nearing a deal with a private equity firm in a bid to take the department store private.
I mean, this was rumored back. We know that the stock took off. If you look at the charts, you can find the time that it took off, Joel. It was where was it?
Oh,
sure if I
it
can find it.
July.
Was that November 2016?
I think it was a while ago. Yeah, I'm going back further than that because the big fall off, I believe, was when they said that maybe the deal isn't going to go through. Or was it? No. It was June. It was just June. It was when it went from 40 to 48.
Yep. Yep.
That's it. And then, it sold off a little bit there, but now it popped back up last night to over $50. It's come off those highs. So it looks like there is the potential for this to go private here. That lifted all of the other department stores last night as well. And we know Nordstrom has given some of it back, but Macy's was up significantly. Macy's is giving some of it back now too. I know Macy's last night was trading up in the 80s. It's trading in the at 22.47 right now. Kohl's was trading up last night significantly as well. It's come back off those highs too. So a lot of these retail stocks have come back off the highs after getting a huge pop from that Nordstrom news. But it's still not a done deal here, and that's why I think investors this morning are starting to get a little more grasp here and say, well, maybe we shouldn't be buying this at 50. It was actively trading the 49 handle last night. Now it's in the 47 handle last night because they got potential financing for it doesn't mean it's going to go through here yet. But it does look like it's more likely to go through. That's why the big pop in JWN this morning.
And it just popped up to that resistance level that it got to on a few different pops that run in April, ended just at the $50 area. Then when we popped up before it got to 50, Dennis, were you around when it got up to that 49, 50 area?
I traded this. I actually was able to scoop up Kohl's. I bought some of the Gap. I bought some of the XRT. I was all over it. So within like 10 seconds, I had already Nordstrom popped, and I was like, "Whoa, what's going on?" 48. I saw the headline, and then I just went and started scooping up retail stocks. So I've sold a lot of those already. I still have some Kohl's left. I got rid of some in the around 50. I sold the XRT already because it got a nice pop for me up to over 41.25, which, you start talking the Gap. I was able to get out of some up in the 90s last night. So, I've still got a few of these left over that I couldn't get out of them all, but that's just pure sympathy trades. I mean, when you see something like that, Nordstrom takes off, it's going to lift Macy's, it's going to lift Kohl's. And if you're on it within a few seconds, you usually can make some money. And, luckily last night I was quick enough to scoop some of them up. Now, that being said, this is a total different story here this morning, obviously now, because Nordstrom's starting to come in here a little bit. So, if you're thinking you're coming in here and, you can pick up some Kohl's 20, 30 cents up, I don't know if there's as much money in it as there was last night, because Nordstrom is not up nearly as much. If Nordstrom was up at 50, I'd say we're really going to lift the XRT and probably all the retail stocks, but it's already, the sentiment's kind of turning back because it's already given back half the gains. So now sympathy isn't going to work as well as it was last night when Nordstrom was at 50.
And Spencer, did you mention that Nordstrom was opening up a much smaller store that didn't have clothes?
Yes, they are opening up I think this is. I mean, it is an experiment, and it's a store basically where they don't sell clothes in the store. They have other services, and you can buy clothes, or you can like online at the store, or you can have someone help you buy your clothes at the store. But they don't actually sell clothes, and it's more of like a experiential store. Let me find the exact articles. I think it's
it's good. I mean, obviously these big boxes are expensive. You need a lot of employees, a lot of overhead, and I think it's a good move. I mean, they're selling out here. If they do sell out, $48, $50 area, much closer to the lows of the move here, under 40.
Well, they're not selling out, Joel. They're going private.
Well,
so that's a big difference. They're scooping up all the stock for themselves. So that's a bullish. It's one thing to sell. It's another thing to go private. That's saying we don't think our company is valued correctly by the market right now. We'll buy it. Yeah, so that's, it's obviously saying, some pretty good confidence in your own company there.
The average Nordstrom store is 140,000, or the standard 140,000 square feet for a standard Nordstrom store. Nordstrom Local, which will be open on October 3rd in West Hollywood, will be 3,000 square feet. So a fraction of the typical Nordstrom.
140,000 square feet.
That is your typical Nordstrom department
store.
store.
Wow, you're right. So the overhead when you're running these stores. Wow. Yeah, I guess they're big. Like you think about, you go in there, they're huge. When you say it like that, 140,000, like that's bigger than a Walmart, isn't it? I thought Walmart's were like 120.
I know. Let's find out.
All those stats, but that's enormous stores. Yeah, the overhead is just, it's killing all these companies. That's what it's really done. I mean, when you got Amazon competing and they don't have any overhead at all like that in those stores, it's tough.
Yeah. Okay. All right. We need to move on here. We got other issues here. I don't know where you want
Ace
to go.
is waiting for us to discuss the diamond comments from Bitcoin here. He's asking, and this is definitely was the next one on our list there, Ace. So thanks for bringing it up. Jamie Dimon comments on Bitcoin yesterday. Spencer was said. What was exactly said? And then we can discuss it.
Okay, here we go. It's just not a real thing. Eventually, it'll be closed. I'm not saying go short and sell 100,000 of Bitcoin before it goes down. This is not advice of what to do. My daughter bought Bitcoin. It went up. Now she thinks she's a genius. He kept going. It's worse than tulip bulbs. It won't end well. He also said he would, quote, fire in a second any JP Morgan trader who is trading Bitcoin for two reasons. It's against our rules and they're stupid.
Okay. Is he firing his daughter then? He just said his daughter bought Bitcoin. She must have gotten some trouble for that one. Did she get grounded when she bought Bitcoin?
I gotta tell you, I got a text from Jeff Goldman today.
What's Jeff doing? We gotta know. Okay, so out of everyone, you brought Jeff on this show when Bitcoin was like $1,800, and he was saying, "Own this thing, it's going up." So Jeff, has obviously made a lot of money with it. He's been on our show. We need to get Jeff back on the show.
All right, I will text
What's he doing?
him.
What did he say?
He said he's this is it. Not loving the price action in the cryptos. Sold some more Bitcoin and ETH. Feel it could get ugly.
Whoa.
And, yeah.
And Jeff, out of everyone, he has been bullish the whole time. So Jeff's turning on his opinion. Is this the Jamie Dimon top in Bitcoin? Question. Jamie, and like his comments or don't like his comments, you've got to respect how influential Jamie Dimon is. Remember early 2016 when the oil crisis was on and all the banks were getting killed and everything was getting killed in early 2016. Yes, we did have a little bit of a correction in early 2016, if you can remember back to then. Remember what?
Yeah.
1802 was the Jamie Dimon low. 1802.50.
1802.50, the Jamie Dimon low, because Jamie Dimon came, he bought more of his stock and said some positive commentary, and the market blasted off after that and never looked back. That was the Jamie Dimon low. I think we were the first to coin that on pre-market prep, then everybody stole it from us. But anyways, obviously
you did, Dennis. You're the one who made it. And then
that day I was like, is this the Jamie Dimon low? And then I heard everybody, a month later saying that was the Jamie Dimon low. They're stealing our material. Anyways. Is this the Jamie Dimon high in Bitcoin? I'm going to say right now, is this the Jamie Dimon high? Chat, you can discuss here too. What are your thoughts here? We've pulled back significantly here because of the Jamie Dimon comments. I believe somebody said it was straight. I haven't looked at it, but somebody was saying it was trading down 7 or 10% here off of the Jamie Dimon comments. Thoughts here? Is this the Jamie Dimon top in Bitcoin?
Well, Dennis, I have the GBTC up, the ETF, and I don't know if you can bring that up on your charts, Dennis, here, but you had to spike over 1,000. This is basis the GBTC. And then you've come back down now. It's kind of a funky looking head and shoulders because you have more of a left shoulder than a right shoulder. But to me, just looking at this GBT chart, 700. I mean, it had a big run from 400 to 700, a little breather, 700 to, 1,025. And now you're right back. This 700, I'm going to keep an eye on this.
Because it didn't really, it went down a little bit yesterday. Is this going to open lower? Because it's not open right now. And is Bitcoin, for you Bitcoin traders out there, I don't trade Bitcoin. Is Bitcoin overnight trading down 7 or 8%? Somebody told me it was trading down 7% here overnight. Is that correct? Because GBTC is not open right now. So right. It's, it's not open for trading here yet. So I'm just curious if GBTC is, yeah, okay. John Dodson saying it's going to open. It's 650 now, so it's going to open lower, is what he's saying. So, okay, thanks, John. That's what I was curious about because I don't follow the Bitcoin. We've talked Bitcoin a few times on the show. Wait, continue your point. I interrupted you, Joe. I interrupt you all the time.
No, that's okay. That's all right. No, just
give us a technical breakdown. So let's say it's opens at 650 today. What's the story if it does open at 650?
Then it's going to 600. And it might get a bounce at 600. This is GBTC, so this is not the actual leader. But
and this one here again, we've said about this. It trades has a ridiculous premium over the actual Bitcoin itself. So if I was an investor, and not saying I am, I think I'd rather go out and get the Bitcoin instead of paying the premium to go and get the GBTC, because there is that, Citron talked about that eventually that premium is going to close, especially if you get some actual ETFs out there that premium could come in. So I'm not sure GBTC is the best way to play it. Maybe a better way to play it is to go get the Bitcoins itself. But that being said, I'm not going out and buying any Bitcoin or selling any Bitcoin. I don't know enough about it. And I've argued before that I'm just scared of the barriers to entry there as well. I mean, we got 1,000 of these coins, or 1,000 of these cryptocurrencies out there now. What's to say somebody doesn't come up with something better? And Ethereum, they've talked is maybe some people say that's a better one. It's early in stage of this as well. We can look even to the internet in 1995 and 1996 and 1999. And if you look at what the internet, has done since then, it's obviously grown a lot. But there was a lot of internet companies in 1999 that went bankrupt. And that was because you didn't know who was going to be the survivor. I mean, back in 1999, you could have looked and said, oh, well, Amazon, you can look us up so much since then. But Amazon was just the online bookstore. How did we know the online bookstore was going to be the one? It was difficult in 1999. Hindsight's 2020. But in 1999, it was very difficult because there was so many companies selling everything online. You had pet food, you had, everything you could think of, blinds, everything you could think of was getting sold, and starting a website. And everything had crazy valuations. And we know, 90% of those companies didn't make it. So you got to kind of find the ones that are going to. Maybe Bitcoin is the one. Maybe, it's been the leader the whole time. Maybe it's going to continue to be the leader. One thing, though, is Yahoo was the leader in search for a long time as well. And then Google came around, and we know what happened to Yahoo. So that's my only thing concerning is, if I'm picking one of these cryptocurrencies, I don't know if I could pick the right one, even if I believe in cryptocurrency. So maybe Bitcoin's going to be the one. I don't know enough about it, though, so I'm not putting my money in Bitcoin or any cryptocurrency.
All right, Spencer, 8:34 and change here. Who is our 8:35 guest?
Henry Gamble, coming on today. He's the Vice President of Simpler Options. He's going to talk about what he's looking at in the market and what trades he's been eyeing recently. So we'll be right back with Mr. Gamble.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel L. Connon, along with Dennis Dick, Spencer Israel working the boards, and we have Henry Gamble on the line. He's a vice president at Simpler Options. Henry, how you doing on this Thursday?
Doing quite good. Thank you.
Thanks for coming on the show here. I don't know if you were listening when you were in the green room there, but we were talking about Bitcoin, and one of my buddies that's been in it for a while is getting a little bit nervous. Is this something that you're trading or you're looking at?
Well, it's definitely something that I'm trading, but the term trading may be kind of loose. A lot of times when we're trading, we think, 1 to 2 day or 3 to 5 day positions. But the way that I'm thinking with Bitcoin is that it's something that is a little bit more of something that I want to buy and hold for maybe 2 to 3 years at a minimum. So it really just depends on what your expectation for the trade is. If it's something that you are trading more actively, then I think you have to accept the volatility that market has. If you're approaching it from a little bit more of a swing-based perspective, I'm looking at these pullbacks as buying opportunities. So
And how come? I mean, do you see this transforming the currencies? No euro, no dollar, no yen, no Deutschmark, and it's going to be Bitcoins, or because we really struggling to find a fundamental reason for it. Do you have that, or are you just basing this on the price action?
I'm basing it entirely off of price. I mean, I do think there is a revolutionary market that is occurring with cryptocurrencies, and I think that will continue to expand, and I think it will continue to grow. But to look at it and say that it's going to completely replace these other currencies, I mean, obviously, I'm not going to try to make that type of an argument at all.
Okay.
I also like to think from the point of view of, as a trader, our whole job is to some degree speculation. So, it's just a place where kind of like the gold rush that you had, so many years ago, it's a place to at least give it a shot. I look at it and say, okay, if it doesn't work out, it's a manageable investment, but I just think there's a lot more upside than there is downside. So not saying it's going to be, completely replacing type of technology, but I do think it's transformative, and I think it makes sense to have it, just to diversify.
Okay. And, they talk about AMD and NVIDIA as stocks that, can benefit from this with the mining aspect. Do you see any ancillary plays in the stock market, or are you just looking straight at the currency?
Well, I always say trade the chart that's in front of you. So
Okay.
while you can put things like NVIDIA on top of a chart of Bitcoin and make some comparisons. And granted, to some degree, they do track with each other, but I just try not to think in that way because, correlations are so great right up until the moment that they stop working. And to say that, this is what's led the rally in NVIDIA, that's fine and acceptable. Is it going to continue to push it higher? I just think I just trade the two of them completely independently. So when I look at the chart of NVIDIA, I try to think of what the best play is there, regardless of what Bitcoin is doing.
Okay. All right. So let's move on to expirations here. And it seems that they just have kind of lost their luster. It was the triple witch, and then they threw in the single stock futures, and they made it a quad witch. And it just doesn't seem, maybe the computers have figured it out or whatnot. But you're looking at the witching expiration coming up for some trades, and you're looking at the yen, and you're also looking at some statistics. So tell us how this Q3 expiration is shaping up for you.
Well, to your point, and when you say things like, the machine's kind of taking over, I mean, I think there is a lot of that goes on. I also think that expiration used to be a lot more, maybe fun is the right word, back when Apple was trading $600-700, when Netflix was trading $600, when MasterCard was trading, when these stocks split, there's going to be less premium near those at the money strikes. And it's not quite as fun as it used to be because there used to be a lot more premium there to take advantage of. However, when you look at things like Apple, for example, and of course, I think they're a great one to think about this with because they're currently sitting right there inside a range. And of course, regardless of yesterday's announcement, I think it's one of those things where you look to the open interest. There's a ton of open interest in those 160 calls that expired this Friday. And there's a fair amount on the put side too. When you see those standout points of open interest, even though it's not as fun as when Apple would trade back at $500, it's still worth looking at things like that short straddle at 160. You could also do an iron fly. There's just a lot of ways to try and take advantage of that range bound action. And I think that does a great job of, because everybody's going to argue about the report, like, oh, is that bullish or bearish? I would prefer to not have any type of an opinion off that, but instead say, sell the options. So those people that are making those directional bets, and then try to get time decay to come in for you, over the course of the next 3. And you can even do them out into next week. They won't decay as fast, but they'll be a little bit easier to manage if it goes against you. And that's what I'm trying to look at. You can also find opportunities like that in IBM. I like to look at charts like that and say, it's not bullish, but it's clearly coming up off of the lows. So when you can find charts that are kind of mixed like that, same thing there, where we're just looking at basically a strategy that is short the 145 straddle. And, you just look for it to sit there and consolidate for 2 to 3 days. And that's, the main way that I try to take advantage of these particular expirations.
So how do you mitigate your risk on something like that? You got a lot of premium you're bringing in, if you're selling the 160 straddle here, You do have some risk. I know Dennis has sold some straddles in the past and big moves. Do you do something on the outside, kind of set some wings up so your loss is limited? How do you do that?
Well, I try to cover it basically each of those ways. So when we were discussing this yesterday, when I put the trade on, you can do it $2.50 wide with the protection strikes. If you want to really limit that risk, you can go out 5 or, even a little bit wider if you want to get closer to the short straddle. So if you prefer to have less risk on, those risk defined strategies are a great way to do it. If you do prefer the short straddle, I just like starting small and then being willing to work around it. So I'm not going to put my entire amount of risk on with the first time that I have the idea. I'll put a couple on at 160. And then if we gapped, say we were down hard today, well, then I'd look at defending it by maybe selling some 158 puts. If we gapped up, I'm going to try to sell the 162 half calls, that type of thing.
Okay. All right. And then IBM, you're looking at the 145 area. I saw that stock on the low of the move here a couple of days ago near the 140 area, coming up to some resistance here. Talk about your IBM trade.
Well, the idea comes back from, and it depends on which aspect of technical analysis that you enjoy, but I love using Fibonacci work with what I do. So if you go back and you look at the weekly chart, you've got that major low that came in about 117. And if you take that major low that happened right there towards the end of right at the beginning of 2016, if you take that low against the high that it put in then, almost a full year later at 180, you're at a perfect 618 retracement of that move. So that's something that I found helpful because when you look at that daily chart, it looks pretty bad. But if you come back and look at the weekly, it'll help you point out those bigger levels of support. So I'm thinking, okay, I've got a big level of support that's, that we have bounced from. And then on the flip side, you're coming right against the 50-day moving average. So I'm just trying to find points where you've got a good technical area of support, a good technical area of resistance, and then trying to complement that technical analysis with a high probability option setup. And that's kind of where the two of them meet.
Okay. The yen. We'll pull up a chart here about the yen and the dollar's just been getting killed here. Yen's probably been a beneficiary. Give us your fundamental and your fundamental and technical outlook for the Japanese yen.
Well, one of the main things that I try to follow with the yen is just the carry trade and looking to it to see if we're in a risk on or risk off environment. You can see that over the course of the past, let's call it 3 weeks, maybe closer to a month, that you have really seen the yen start to catch a bid when equities were getting hit. And I think that that's an important thing to follow through with also, or important thing to follow up on, because one of the main signals that I use in my trading is the squeeze that, I know you've heard John speak about that, and I spend a lot of time with it as well. You've got a daily squeeze that is forming, which would suggest that the yen is about to have a significant move. Okay, if the yen has been this flight to safety when equities are having trouble, and we have a signal that's telling us, hey, the yen may be having a significant move here relatively soon, I just think it's really worth paying attention to. Then you start getting into the seasonality of the week after the Q3 expiration, after this, triple, I think it's more of a triple witching because like we were discussing,
right.
The singles, nobody really trades single stock futures, so you can name it whatever you like. But after this Friday's expiration, you're typically seeing a down week in the week that follows that. So I just think, okay, if seasonally we're in a place to be careful and we have a flight to safety currency that's telling us the same thing, I just think it's really a weekend to be careful with what you go into the long side. And it's not because I'm trying to quote any type of, obviously North Korea has been a big focus. And I just think things like that are, I'm not going to try to predict that over the weekend, but I see things technically that tell me to be cautious. And then if something does unfold, well, then the technicals precede the headlines.
Correct. Okay. Just taking a look at a couple issues here. McDonald's. That thing, just one of the most unusual moves in late 2016, for 2017. And then you get a headline yesterday, maybe that's why it went down. Maybe there were other factors here. Just taking a look at Mickey D's here. Do you have anything looking at the expiration, big red candle, or anything from a longer term perspective?
I was looking at that. Of course, anytime anything has a significant correction, it usually draws attention. And as I was looking at it, all I can think about is getting long. Now, of course, when you have a significant down day like you had yesterday, it gives you a reason to take a pause. But I am much more of a devoted trend follower. And when I look at that, I just think, there's no reason for me to come in there and say, oh, this is the high in McDonald's. I'm going to go back to it and look at relationships, like what you saw from it would have been the July 25th high that takes you down. And then you go about 2 weeks or so into the August 4th low. So it's a trading period of about 2 weeks. But what I'll do is step back and say, okay, that was a certain point value correction. If we were to go through the same point value correction now, would that give me an opportunity to buy it? The level that I have on that right now takes you into, you'll find support at I have it at 155. So it's just saying, stocks, or especially in this case, I'm just looking at the relationship of those patterns. And until that pattern changes, well, then I'm going to continue to try and buy it. So,
Okay.
I think it may take a day or two to settle. Working something around the 155 strike might make sense. But, you're also looking that earnings aren't that far away. And to look at it and say, oh, I think it's going to fall apart. I don't think that's the case. I think it would catch more of a bid into the earnings report, but it may take a few days for it to find its footing.
All right. And I just wanted to ask you about the insurance sector, the reinsurance sector. A lot of volatility in them last week, a little bit of recovery. Was that something that you have a perspective on, maybe R&R or RE?
I tend to avoid those types of trades because anything, and I think what you're looking to with a lot of these, and I was looking to it through Progressive, but you can name any of those names, but you get everybody that's thinking a certain way. And generally when the entire crowd is focused in one direction, that is not where you want to be trading. So I looked at things like PGR where everybody was bearish that obviously, and thankfully, the storm didn't end up being as bad as they had predicted. And then you got everybody that was stuck short that just gets, ripped apart at the beginning of the week. So I try not to get too hung up around headlines or, things like that I think are on everyone's mind, and instead try to think from the psychological point of view to say, and like I was saying, I ran more analysis on PGR, but everybody was getting bearish when it was right at the 100-day moving average. And I just try not to overthink it, because if you can stick to a technical trading plan, well, then at least for myself, I know in a bullish trend, pullbacks to the 100 days should be bought. And then you see that come through over the course of the past 2 days. So I just try to focus more on technicals as opposed to saying, they're going to get, just avoiding that crowd psychology as best I can.
Yep.
And then just executing off of pure technicals.
Henry Gambell, Vice President of Simpler Options, calm, cool, and collected here on Benzinga's Pre-Market Prep Show. Thanks a lot, Henry. We'll speak to you again soon. Have a good expiration.
You too. Thank you.
Okay. All right. It is 8:50 here, and the S&P's made a low at 24.91. We could bring Jeff in at 8:55 if you want. Spencer.
Yeah. Let's bring Jeff in.
Okay.
Okay. So that gives me 5 minutes to do a lot of talking. I wanted to say the McDonald's move yesterday. So, and this is something that happens periodically that, media will always 100% of the time find a fundamental reason for the stock to go down. Sometimes it's a fundamental reason, sometimes it's not. Was the M Science report a catalyst? Potentially it was. It probably was. But I'm saying there was other factors at play here. Main factor is that M Science report was not really, widely disseminated pre-market. So there wasn't a lot of traders that were saying, whoa, McDonald's is going to open down $3 or anything. So what happens is when it's not, all out there and everybody's talking about it, is you see McDonald's opening down $1 and you see the S&Ps trading up. You have a lot of traders that play the stat arb off of that saying this McDonald's opening down too much relative to fair value and we're going to jump in. So I think you caught a lot of not only other traders, you probably caught some machines too, maybe coming in there and buying that open. While now the M Science report's getting out there, now the floodgates open. Now you have a lot of traders that are long off the open caught. So you have these short-term opening traders. I'm one of them. I'm very cautious about these crowded opening trades because I know how fast it can kill you. And a lot of times you'll see violent moves off the open because you've caught a lot of the OPG traders, the opening traders there on the wrong side of the trade. there is no liquidity in the first couple of minutes on almost all stocks. So, that's why we have such violent moves. Market makers like your high frequency market makers usually back off in the first minute or two until, they get a better feel for where the stock is. They don't like having risk. Their profit margins are, half of a cent, even less than a cent. So they can't be coming in and losing dollars on McDonald's. So they're out. They're the majority of your liquidity. So there's no liquidity in the first few minutes of McDonald's. Now you get an M Science report that's getting widely disseminated at the same time. You have a perfect storm. You have traders caught off the open that, the stock opened down and they were thinking it's going to pull back up. They're wrong. Now this M Science, now the panic ensues. Stock falls $4.50. If that M Science thing comes out middle of the day, McDonald's isn't down $4.50. I'll say it right now. It was because there's no liquidity on the open, and that report started getting coming out right around the open there, and obviously a lot of traders caught on the wrong side, and the opening traders will get hurt, because that is just a classic crowded trade going wrong.
All right, 8:53 here. Do we cover all the stocks on our list, or should we do some ratings changes?
There's a lot. We could do the ratings changes quick and balanced. We'll do the imbalances in 1 minute. There's some interesting ones. Pfizer, 218,000 to sell. That's significant. Pfizer trading down 20 cents here in the pre-market. Square, which did get some rating analyst. There was an analyst. I think it was, who was it? Square overweight.
It was Cantor.
I can't read my own writing. I have it right here. Cantor.
Cantor.
Was it Cantor?
Yes.
Yeah, Cantor, putting an overweight on it. It's got 122,000 to buy. Looking here, Alibaba 65,000 to buy. Our Alibaba buyer continues to be there. AT&T 90,000 to buy. Nike 73,000 to buy. Those are the standout ones. The other ones are all kind of small. These types of days, it's typical that you see them pretty small. Snap, if you're still following SNAP, 38,000 to buy here this morning in Snap.
All
Back
right.
to ratings land, Spencer. Take it away.
All right, what do we got this morning? Finish Line upgrade at Susquehanna, Dow DuPont upgrade at Cowen, Micron upgrade at Goldman, Applied Materials upgraded at Goldman. Those are the biggest upgrades. And then as far as downgrades go, Nordstrom downgraded. I mentioned. Oh, we also just mentioned one, but Nordstrom downgraded. We have Mallinckrodt.
Who downgraded Nordstrom?
Let me find it wasn't a large firm. It's
okay.
Yeah, and Mallinckrodt downgrade at Mizuho, Gordon Haskett downgrade Nordstrom,
Okay.
Rockwell Collins downgrade at Baird. Those are the big ones. Yeah, those are the big ones.
Okay.
All right. Do you have Jeff's number there?
I do.
You want to bring him in on the fly?
I can bring him in on the fly. Well, he won't mind.
knows.
He won't mind
I
that,
just
right? Okay, so we're going to call Jeff Goldman on right now. He's the author of Failed Traders, 20 Common Mistakes Committed by Over 1,000 Losing Traders. Jeff, are you with us?
Hello.
How's it
Jeff,
going?
you are live on Benzinga's pre-market prep show. How you doing today?
Good, Joel. How you guys doing?
Good. Not only is Jeff the author of the book that Spencer just mentioned, Failed Traders, the 20 Common Mistakes Committed by Over 1,000 Losing Traders, he's also my personal trainer that works me out real hard. But Jeff, okay, you're in this position, and I know you've been in it for a long time. Are you, and you just sent me a text, you're getting a little bit nervous here. If you're looking at the 20 common mistakes committed by over 1,000 losing traders, what one are you applying now to your risk reward and your potential exit in Bitcoin and Ethereum?
Well, one, you're assuming that I'm making a mistake. Number one. I actually don't feel like I'm making a mistake. I'm actually, one of the mistakes that I could possibly be making that I'm avoiding is falling in love with the position. So as much as I love and have been hyping Bitcoin and Ethereum for 3 or 4 years now, I was way ahead of the curve on this one. I do feel like it's way, and I don't think this is any new news to anybody. I think it's just way ahead of itself price-wise. And I probably could have said that at 2,000, 3,000, 4,000, and 5,000. But at the time, it was still going up, and you just, you ride the wave. But it's starting to roll over. There's starting to be a lot of negativity from some bigger people. I think this this Jamie Dimon comment yesterday really was maybe a straw that broke the camel's back, along with all the China news that's been coming out for the last week or so.
So Jeff, have you sold your Bitcoin now, or are you going to sell it today? Or you're not selling it? What are you doing?
I've had stops in on the way down.
Okay.
So
can you put a physical stop in, or is it like a mental stop?
No, you can. There's the biggest exchange is GDAX, GDAX.com. It's actually owned by Coinbase, and you can actually swap any of your cryptos. They trade Bitcoin, they trade Ethereum, they trade Litecoin, and you can swap them back and forth instantly between one's a wallet and one's an exchange. So yeah, GDAX. There was a debacle a couple months ago with a flash crash, that the one that they talked about in Ethereum, that happened on GDAX. So I put stops in overnight, woke up, had a few less Bitcoin than I had when I went to bed, and I still have some on the way down. But
how's the slippage? How's the slippage on those?
It's not bad. It's not bad.
bad.
Like right now there's a $3 spread, which isn't that bad.
Okay.
Yeah,
no, it's not bad at all. We're talking $4,000.
Yeah, it's nine by 5, 9 on the bid, $2 spread. 9 Bitcoins by 5 Bitcoins. So not that bad.
Jeff, just before you go, I mean, you just can't wake up and sell. I mean, you've talked to me about the different procedures and the wallet, and this is locked up here, and you have a password from there. So just I mean, it's just not like boom, hitting the hitting the sell button and you're out. Talk about the procedure. You've explained this to me while I'm working out, and just highlight that, because it ain't easy.
Well, no, it isn't. It isn't. It depends on the level of security that you want for your coins. So, for example, on Coinbase, you can store your coins what's called cold storage, or it's called offline, where it takes, for security measures, it takes 2 full days from the time you put in a request to move from offline to online. With the reason for that is if someone hacks into your account and you get a bunch of emails that goes to your email, it says a withdrawal has been requested. Is this you? And you have to say yes to that email. So even if somebody got into your account, they would still have to have access to your email as well. So there's some security measures there. And then, but if you have your Bitcoin on Coinbase, it's pretty. You can sell it instantaneously. It's not a long procedure.
So thoughts here now. Now, are you completely out, or you're still going to hold some here, Jeff?
No. I still have a fair amount.
Okay, you're just lightening up.
Probably from my all-time high, I've probably sold about half.
Okay.
But I'm in a lot lower. So
yeah,
I've said all along, even when it was at 3,000 or 4,000, I said this can go to 0 without a problem, and it can go to 50,000. I can see both, and I'm a little nervous.
Can you outline those two scenarios? Okay, so this is because you're saying you could go either way, it could go to 0. What's the scenario that takes it to 50,000? What's the scenario that takes it to 0? We're asking big questions over here at Jeff at 9.
I hope you don't have a 9 o'clock client coming in. Go ahead, Jeff.
I do, literally, I do.
Okay.
50,000. If the hype keeps getting up there, and more institutions get in, and more, it's obviously demand driven. And keep in mind, there's only maybe 14 million Bitcoin, and there's only going to be 21 million. There's not, if you really think it's not a lot of Bitcoin. So if you get some big people or big players in, they can really, really move this thing. And then you have, people like, Dimon comes out and says it's a fraud, then, it can really go back to 200 for all I know. So, and he makes some good points in his article where people people are starting to separate the blockchain technology from the Bitcoin, and not denying at all, because even some of the banks are getting involved in the blockchain technology. The blockchain technology is here, it's real, and it's here to stay. The
All right,
Bitcoin,
could you just explain that? I mean, I know we've beat you up before on this, but he even explained Bitcoin and the blockchain technology to my buddy Ira, who is the most removed person from the markets or trading or anything. And when we were out at Jeff's place, he laid out that blockchain technology. Even I understood it too. So could you just do a quick 1 minute synopsis of that? Then we'll let you get to your 9 o'clock client.
yeah, it'll be 1 minute. So it's a digital ledger when all transactions are recorded chronologically and publicly. So if I send you a Bitcoin, for example, it's recorded for everybody to see. Not only that, but everyone, all the different participants, it's decentralized. So everybody runs a Bitcoin server. I'm really simplifying this. And they have to go and verify that transaction. They have to go back since the beginning of Bitcoin time and see that I really own that Bitcoin. So they go through the whole transaction from, I mean, maybe this Bitcoin got traded and transferred, I don't know, 5,000 times from changed hands. The ledger goes and checks to make sure that I really, really own that Bitcoin. And then it's written to the ledger and it can't be changed. That's what makes Bitcoin so unique, in that I can't spend that one twice. I can't spend something I don't have. Somebody can't go and print more Bitcoin like the Federal Reserve. And that's why there's a finite amount. They're created on a daily basis. The next 7 million will be on our schedule to be created between now and like the year 2140. And so there's no inflation. Well, there's inflation, but it's very, very, very small. And you can use it for anything, not just currencies, but now they're using it for supply chain management. My sister works for the FDA. They're starting to do some things now for drugs, for counterfeit drugs, just all different types of applications can use the blockchain. And then you have Bitcoin. Bitcoin is the currency that runs on the main Bitcoin blockchain.
All right, we're getting a lot of questions here. I know you're busy. We're going to let you go, and we're going to have the Jeff Goldman show. Maybe one day next week on Bitcoin. Make sure you can block some time off for it. Jeff Goldman, author of Failed Traders, the 20 Common Mistakes Committed by Over 1,000 Losing Traders. Dennis and I contributed to that book, and our resident Bitcoin expert. Thanks a lot, Jeff.
And it's on Amazon.com.
Okay, I forgot to say that. All right, buddy. All right. Thank you.
Bye.
All right. What a few minutes over there, Spencer.
It's okay. We start a little late, end a little late. So it all makes sense in the end. But that is it for our show today. Again, tomorrow we'll be joined by Gene Munster, formerly of Piper Jaffray, now of the venture capital firm Loop Ventures. Joel will not be with us, unfortunately, tomorrow. He's leaving us for the day. He's going to a new show. He'll be guest hosting Stocks and Jocks down in Chicago between the hours of 7 and 9 a.m. Eastern time. So, Joel, we wish you well on your, I guess this is your sports talk radio debut.
It is 7 to 9 on stocksandjocks.net, or if you're in the Chicagoland or Arizona area, you can listen to it. If not, stocksandjocks.net, you can listen to it there. But I want you guys to switch over at 8 o'clock and listen to Dennis and Spencer, because I don't want them getting mad at me.
Well, we'll see. We'll see what happens. So good luck, Joel, tomorrow. And then, like I mentioned, we'll be joined by Gene Munster on tomorrow's show. So that is it for us. Have a good rest of your day, folks. And we'll be back with you again on Thursday.